Have you ever dreamed of taking your business global? I mean, maybe you're an artisan crafting beautiful handmade items right here in India. Or, perhaps you're a brilliant graphic designer creating digital templates. The idea of tapping into those massive consumer markets in the US, Europe, and beyond, it's incredibly exciting. But for so many creators and entrepreneurs, that ambition just hits a massive brick wall the second they start Googling the legal requirements. It honestly feels like a labyrinth of government acronyms and red tape. Well, put those fears aside. Instead of getting bogged down in all that complicated legal jargon, let's understand this together in this guide. We're going to map out exactly what you need to know to take your Indian business to the world safely and legally. It's kind of the ultimate double-edged sword, isn't it? You get that notification on your phone, your very first international sale on Etsy, or a new client on Fiverr, and you are absolutely thrilled. But then, almost immediately, the headache of legal compliance sets in. You start wondering, do I need a special license? What about customs? Is the tax department going to come after me? Am I even allowed to accept dollars into my local bank account? It's completely normal to feel overwhelmed by all these questions. But, ignoring them isn't a strategy. Understanding the rules is literally what separates a stressful hobby from a scalable, profitable global business. Okay, let's dive into this. We've broken this complex web down into 5 clear steps. First, defining your global business. Second, navigating GST and income tax. Third, following foreign money rules. Fourth, customs, IEC, and logistics. And finally, platform rules and copyright. Step 1. Defining your global business. And this brilliantly illustrates the core difference you really need to understand. If you pack a box with 5,000 rupees worth of handmade jewelry and ship it from India to a customer in the USA, that's a classic goods export. Simple enough, right? But what if you're sitting at your laptop in Bangalore, designing a logo for a client in New York via Fiverr, or selling a digital planner? Well, the law considers that a services export. Selling a digital service or a digital product abroad is legally an export, just like shipping a physical craft. The critical conditions here for services are that your client is located outside India, the service is used outside India, and most importantly, your payment is received in foreign currency. Both are exports, but as we'll see, the rules they trigger are kind of different. Moving right along to step 2, navigating GST and income tax. Now, what's really interesting about this slide is this giant zero right in the center. Whether you're exporting physical goods or digital services, the goods and services tax, or GST, rate applied to your export is 0%. Yup, 0. In legal terms, an export is considered a zero-rated supply. Basically, the Indian government doesn't want to export our domestic taxes to international buyers because, well, that would make Indian products way less competitive globally. So your tax burden on the actual export transaction is beautifully minimized. But there is a catch. There's a specific way you have to claim this 0%. You can't just ignore GST entirely. To legally enjoy that 0% rate without having your cash flow tied up, you need a document called an LUT, or a letter of undertaking. By filing an LUT online through the GST portal, you're basically promising the government that you're executing a legitimate export. This allows you to export your goods and services without paying GST upfront. It's a fantastic tool for your business cash flow. However, and this is absolutely crucial, remember that you still must report these zero-rated exports properly in your monthly GST returns, specifically your GSTR1. You're reporting it, you just aren't paying tax on it. Okay, so while GST is handled with an LUT, income tax is a completely different bucket. You will have to pay income tax on the money you make. But let's relieve some anxiety here. Imagine you make 10 lakh rupees in sales on Etsy over the year. You don't pay income tax on that full 10 lakh. Actually, scratch that. You don't pay tax on the gross revenue at all. You have expenses, right? Platform fees, internet bills, materials. Let's say those total 2 lakh rupees. That leaves you with a profit of 8 lakh rupees. So the crucial point is that your income tax is calculated on your net profit, the 8 lakh, not your total sales. Just make sure to keep meticulous records of your business expenses so you can legally reduce your taxable profit. Step 3. Following foreign money rules. Whenever foreign currency enters India, it falls under the jurisdiction of FEMA, the Foreign Exchange Management Act. I know, it sounds incredibly intimidating, but think of FEMA simply as the rulebook. The government just wants to track all foreign exchange entering the country to ensure economic stability. FEMA essentially mandates that any foreign payment you receive must come through an authorized bank or channel. It has to be received in a recognized foreign currency, and the export proceeds must be realized within a specified time frame. You can't just have someone mail you a physical envelope of cash, right? It has to be tracked. So how do you actually follow FEMA rules? Easy, by using payment gateways authorized by the Reserve Bank of India. If you're selling on global platforms, you should be using approved channels like PayPal, Etsy Payments, Amazon Global Selling, Wise, or Stripe. When the money routes through these official gateways, it's legally converted to rupees and deposited into your account with the proper digital paper trail. One major piece of advice here, always save your foreign inward remittance certificates, or FIRCs, which these gateways provide. This is your absolute proof that your foreign receipts are legal and FEMA compliant. Let's move to step 4 and see how this builds: customs, IEC, and logistics. If you're selling physical goods, say that handmade jewelry we talked about earlier, you're triggering the Customs Act of 1962. You simply cannot bypass this. Every package needs a clear shipping label, a detailed commercial invoice, and a customs declaration. The package will physically cross a border and be inspected. But here is a huge breather for digital sellers. If you're selling digital downloads like a resume template or a printable planner, there is absolutely no physical shipment. Therefore, you can completely skip the heavy customs paperwork. No commercial invoices on boxes, no customs declarations, no shipping labels, nothing. This physical versus digital divide also applies to your IEC, or Import-Export Code. This is a unique code issued by the Directorate General of Foreign Trade, and it's basically your official ID as an exporter. If you're packing a box of physical goods and sending it through customs, having an IEC is almost always required. However, if you're purely providing digital services or selling digital printables on platforms like Etsy, you generally do not need an IEC. The lack of a physical shipment exempts you from this specific registration in most cases, which streamlines your setup process immensely. But whether you're physical or digital, you still fall under India's overall Foreign Trade Policy, or FTP. This policy dictates what is actually legal to send out of the country. Notice the green zone here. Things like digital templates, printable planners, and handmade crafts are completely allowed and encouraged. They're fully in the clear. On the other hand, items like certain chemicals, weapons, or wildlife products are strictly restricted, controlled, or entirely prohibited. As long as you're sticking to standard creative, digital, or harmless physical goods, the FTP framework is totally on your side. Finally, step 5. Platform rules and copyright. Remember, government laws aren't the only rules you have to follow. Platform compliance is key to staying in business. Platforms like Etsy, Amazon, and Fiverr have incredibly strict intellectual property and copyright laws. If you're a digital seller, pay close attention to this boundary. You absolutely can sell things you've created from scratch, your own self-made resume templates, unique attendance trackers, or original Excel dashboards. Which you absolutely cannot sell, under any circumstances, is someone else's intellectual property. You cannot monetize Disney characters, Marvel logos, Nike swooshes, or use copyrighted fonts without a commercial license. A trademark violation on these platforms will get your store permanently banned, and no amount of government compliance will get it back. Let's bring all of this together, especially for the digital creators out there, into one manageable, empowering checklist. To stay perfectly legal, you need to ensure proper GST reporting using an LUT so you pay 0% tax upfront. You need to use approved gateways and save your FEMA records, those remittance certificates, to prove your foreign income is legitimate. You can enjoy the fact that you usually won't need an import-export code or customs documentation. And finally, you must rigidly follow the platform and copyright rules to protect your digital storefront. It's a system, and once you set it up, it runs smoothly. So there you have it. The labyrinth isn't so scary once you have a map, is it? You now know exactly how to define your business, handle your taxes, route your payments legally, manage logistics, and protect your intellectual property. The legal roadmap is clear, and the world is waiting for what you have to offer. The barriers are out of the way. Your legal checklist is ready. So what will you export to the world today? Keep learning, keep creating, and we'll see you next time in the next Explainer.